You are a bit circumspect because of the run-up that we have seen. Do you reckon that this therefore remains or becomes a market which has moved out from a sell-on rally to buy the dip? I mean, albeit it could be a slightly bigger dip from the current 17,500 circa that we are at to maybe 10%, 15% as the case may be. But does that remain from a medium-term perspective a buy on dip market?
Absolutely. So India is always a buy market. The question is, if you get something cheaper, why not? So absolutely, but this is for a global investor. For a domestic investor, we would advise to keep some cash so that you can actually take advantage of the dip when you get into the market.
Got it. You expect a significant dip, Vinay?
Well, I'm hoping not, but having said that, I think the next 3 months are telling. We will probably touch the last time's lows. Today, we are close to 7% below the peak. At one time, we were close to 15% below the peak. So can we resurface those levels of 15,500? I will not be surprised.
You will not be surprised. Interesting. No. Okay. And what gets decimated in that process? 15% on the headline would mean maybe 25, 30, 40% for a bunch of others. So what gets impacted the most, you reckon? Because there are some spaces which are actually showing promise of earnings growth. And in the same vein, there are some high flying performers which have some headwinds. So have you kind of tried to put your head around that?
I'm going to give you the answer the other way around. If I look at the quarterly results, what excited us substantially was the financials. Now, financials in a way is 30% plus of an index weightage. And if that grows at 50 to 55% of the 280 odd companies results which come out, your base impact looks like a solid 12, 13% year-on-year growth. You take that out and virtually you have no growth in the rest of the market. So that's the part we would be bullish on, and especially banks, the private sector banks. That's where we're seeing the credit growth gone from 5, 6 to about 13% on the loan book. You're seeing interest rates move up as well, which basically means if the capex cycle in India takes off, you're in a very, very positive mode as far as banks is concerned and capex-centric companies are concerned. So that's where we would put our eggs. On the other part of your question, what would we avoid in these kind of markets? Markets where, see, the currency today is 80. But unfortunately, if you depend a lot on US for your dollar, as far as your order book is concerned, we don't want to play the trade. So we would be underweight the IT sector, though a lot of it has corrected. We like the big ones, but we won't be equal weight on that space currently.
Got it. Vinay, it's a pertinent point. Financials, the commentary and the performance was strong. I'm glad you mentioned capex, because I thought manufacturing and if you look at the bearing companies' commentary or the performance of some of the others, it kind of laid fruit. I was wondering if you thought the pockets around discretionary, direct to consumer consumption and urban discretionary consumption also appeal to you, because I thought the numbers compared to current quarters or compared to even pre-COVID levels, they are ticking some fairly decent numbers out there.
Absolutely. So our big theme, if you would ask me the other way around, is the India resurgence story. So what we believe is the India resurgence story is the first one that I mentioned to you, which is private banks, but more importantly, the auto sector or the bearing sector. Just think about it, right? Commodity prices are down and out, 30 to 40%. Demand, you want to buy your new car, you want it tomorrow morning. You've seen what had happened in COVID. Companies like Maruti tell you they have a 1/4 of backlog of order booking to be done, which means it will only get built. So technically, the auto sector is finally in a sweet spot wherein demand is there and raw material prices are moving down. You move down the thing, capex and some industrial companies, because capexes are now increasing by in particular sockets, also have order books which have gone up like crazy. So I would buy the India resurgence story. One last comment, marriages are on the rise. Now, if marriages are on the rise, think about the food, the cold drinks, the water, which you're consuming. So, a big story there of companies also is part of our portfolio.